7 starter investments for beginners to start investing today. Index funds are investment funds that follow a benchmark index, such as the S&P 500 or the Nasdaq. When you put money in an index fund, the cash is then used to invest in all the companies that make up the particular index, which gives you a more diverse portfolio. Index funds are not designed for frequent trading. They are optimized for lower fees, which make them better tools to build wealth over long periods of time. But like mutual funds, investors in index funds are buying a predetermined amount of the aggregate market share at one time. Index funds can have trade minimums, but some brokerages now offer index funds for less than $50. Number 2. 401k. If you have a 401k or another retirement plan at work, it's a great place to start, especially since your company may be matching some of your contributions. The free contribution and guaranteed return on investment make it a great decision. You can start contributing as little as 1% of your paycheck, though it's best to aim for at least matching your employer's contribution. When you decide to contribute to your 401k, the money will be automatically deducted from your paycheck and deposited directly into the account. Number 3. Exchange-traded funds. An ETF is a basket of securities, shares of which are sold on an exchange. They combine features and potential benefits similar to those of stocks, mutual funds, or bonds. Like individual stocks, ETF shares are traded throughout the day at prices that change based on supply and demand. ETF are similar to stocks, so brokers would usually charge commission fees to buy or sell them. Thankfully, prices have dropped, and it's now possible to buy and sell ETF without paying any commission. Number 4. Robo-advisors. Robo-advisors can manage your investments using sophisticated computer algorithms, yet they are easy to set up and maintain with little to no overhead. Consequently, they usually charge low fees, typically between 0.25% and 0.50%, and many don't require a minimum account balance. It's a great way to get started investing because they require very little money and do most of the work for you. That's not to say you should completely ignore your account, because it is your money after all. But robo-advisors can do the heavy lifting for you. Number 5. Investment apps. One of our favorite apps for investing is Acorns. It works a bit differently from a robo-advisor because it just handles the investment itself, rather than giving you advice on what to invest in. In this sense, it's more like a rounder. Acorns becomes your financial manager in a way. Whatever you've got in terms of finances, Acorns has the account that suits you best. All in all, it's an automated service that can handle all your investing needs. Number 6. Target Date Mutual Fund. A mutual fund is a basket of investments. You can buy into different funds to get exposure to all kinds of businesses and markets with one transaction. A professional investment manager will choose how the funds are allocated and invest according to certain general themes. A target date fund is often a mix of stocks and bonds that change over time to meet your target retirement. A 30-year retirement might specify a 2050 fund, for example. Given your retirement date is far away, the fund will start off with mostly stocks. Stocks tend to produce higher returns over the long term, so it should possess a stronger balance in future years. As the world moves toward a fully digitalized future, it makes sense that the financial aspect does as well. Cryptocurrencies are extremely high-risk investments, but it's recommended to invest a small amount. We like the idea of investing a low amount every week and just forgetting about the investment for years. The ideal cryptocurrencies we consider blue chips are Bitcoin and Ethereum. There's several investment apps like Robinhood and Coinbase that will help you make your first cryptocurrency investment a breeze. For more specific details on these investments, please visit our website, wallethustler.com. If you enjoyed the video, please consider subscribing. Thank you so much for watching.